Welcome everyone, it's your boy Captain Joe here from Fishing for Pips. On today's series, I'm going to be breaking down the different platforms that people trade from. Now, I don't know what people try to come into financial markets and do, but you have to play the cards right. You have to play the game right. That stack the odds in your favor for you to make good money. That's what you want to do. You want to grow exponentially so you can have life-changing experiences. Otherwise, you could come and dabble around in financial markets, lose a lot of money, make no money at all, or just damage yourself and just waste time, effort, energy, and money. That doesn't really make any sense. Or yield so much small returns that it doesn't even give you any type of financial breakthrough. And you want a financial breakthrough. That's what you want. You want to make good money to better your financial situation, to better your living, right? To better how you provide for your family and all of that good stuff. So you got to play the cards right. So I'm going to break down a few things here for you. Pay attention, take notes, use knowledge, understanding, and wisdom, discernment, common sense, and you're going to be good to go. All right. So when we look at the different areas in the financial industry, the different markets, all right, that people trade in, invest in, etc. So you look at Forex. Forex, you always hear trillions of dollars. $7 trillion, $6.6 trillion. You will always hear people saying different numbers between there. But Forex is the largest financial markets in the world. Alright? And I want you to pay attention to this. Not because you see the Forex market has a capitalization of $7 trillion or a trading volume, a daily trading volume of $7 trillion in it means that you can just put money in a trading account and just go out on pound pairs, euro pairs, gold indices, whatever, and just trade and make money. Don't get fooled about the amount of money that you're hearing and think you can just go and scalp and day trade and wake up Monday to Friday just because the market fluctuating up and down and try to trade for income. Yeah, there's a reason why so many people fail in this industry and never make money. Right? Sunday to Sunday for crypto, 7 days a week, 5 days a week for Forex. Not because the market is open 24/7, fluctuating up and down, and you're hearing billions of dollars in volume, trading volume, or trillions of dollars in capitalization or trading volume in these industries means you can just put some money in a trading account, learn some retail stuff, go there with lines and indicators and moving averages and zones and supply and demand, support and resistance, and trend lines, and look for these breakouts and break and retest and all these Fibonacci and all these different patterns and stuff. Yeah, harmonic patterns and all these different things that people look for. All these indicators to the bottom of the screen. All these lines and drawing on the chart. And think you could just engage in here and make consistent money and make good money and have any life changing experience. You're not gonna have that. What you will have is stressful trading. Yeah, you're gonna lose a lot of money. You will not be consistent. You will not be making withdrawals. You will not be growing a large trading account, and you're gonna falter. So I just wanted to bring this up first before I actually go into the different platforms and show you which is the best platform you should be using to trade. Remember, you want to play the game to make good money, to accumulate and compound good money, to stack the odds in your favor to make good money. You don't want to play the game like another 9 to 5. Your job done and doing nothing for you. Your job salary done and doing nothing for you. Going into certain places of financial markets and making little investment here and there and trying to trade all kind of craziness off of all different type of platforms that you don't understand is not going to do anything for you. Yeah, it's going to be just like a 9 to 5. You can't beat cost of living. You can't beat inflation. Yeah, even if a man have a job right now and he get another job, it's still not going to be enough for you. So even if you working right now and you make some investment here and you making little $50 US, $60 US, $100 US, at the end of the month, it's still ain't gonna do nothing for you. One item taking all our money. You want to be able to start off there, but you want to be able to reach a spot that you can grow exponentially. That now that same 50, 60 started turning to 7,000, 8,000, 15,000, 20,000 on a quarterly time horizon, on a monthly time horizon, annually. And that is where you want to get up into. You can't get there by just staking or just investing in DeFi or in liquidity pools or things without leverage and things that cannot benefit from rising and falling markets. Nice, you wouldn't be able to do that in long-term value investing. So you have to pay attention to where you're actually playing the game in financial markets if you really want to get that breakthrough with the right education, the right approach, through the right platform. Nice. And you can get yourself going up the competence hierarchy. Nice. So do not fall for billions of dollars in these things and think you can just trade anyhow and make plenty of money. Do not fall for trillions of dollars in Forex and think you can just trade anyhow, make plenty of money. When we look at the Riv now, we look at the Riv. You all see a platform out there called the Riv, right? So people trade through the Riv. So it's like a kind of staking platform also. So what people will do is you can trade on the tick chart. 1 hour, 2 hours, 3 hours. You can trade on the tick chart, whatever the case may be. So you're betting. But what happens with this is time is against you. So every time you place a bet or a stake, you get like a contract and you have a timer on it. So time is against you. So within, if you stake for an hour, 2 hours, 3 hours, or even 2 seconds, so 3 seconds, you will have a time for price either go above a certain area, go below a certain area. If you click on rise, it have to rise above a certain area. If you click on drop or lower, it have to go below a certain area for you to actually come out with a profit. Nice. Or you can actually stay level. And you can actually, so it have to be either level, it have to be above, or it have to be according to if you go long or short. And also, when you look at this, if you put $500, if you put $100 in this, and you go and let me say you go on something like gold, and you click long or rise, and you put it for 1 hour. So in 1 hour, from where the marker is, from where you actually bought the contract, it needs to rise above that and stay above that within the time. Anytime it falls back below that mark, and the time expires, you lost your money. So that's the game people try to play. So if you stake $10, you will get approximately $9.95. $9.95. So it's a 1-to-1. So look at what this platform, time is against you. It only allowing you to have a 1-to-1, right? A 1-to-1. So if you risk 10, you're getting approximately the same thing in the payout. If you risk 100, you're getting approximately the same thing in the payout. If you risk 500, if you invest 500, you get $490 something. So it's like a 1-to-1. You do not want to be trading in financial markets that with any platform that gives you a 1-to-1. Yeah? That is not how you want to play the game. You want a 1-to-5, a 1-to-6, a 1-to-10. That's what you want. You can't function with this properly to make money consistently, quarterly, monthly, yearly. And here, you cannot properly well diversify and use portfolios like how we use it in rising and falling markets. Nice. So I'm going to break down how you're really supposed to be playing the game to grow exponentially and to really accumulate and compound over a period of time to make good money. So this is the type of platform people like to go and use sometimes. So they learn, right? They look at the big money and they come into they're using a certain platform and they're trying to apply something like that. Time is against you. You are going to click long, click short, price is going to fall down, come up and expire below where you enter, and you're going to lose your money. You're going to have 3-4 in a row, When you start to get the losing ones on them, it's like back to back. That whole thing there is a whole algorithm thing that they just make up. They know they're gonna sweeten you up with a little 1 or 2 shots first, and then they're gonna destroy you. Yeah. So we look at the RIB. Also, if you look at Binance, right? Binance. You look at Binance, right? People trade futures off of Binance. Trading future off of Binance. What are you doing there? You are using a platform that has a leverage 25, 50, 75, 100. So if you put $1,000 in there and you use 25, you got $250 exposure. If you swipe it up to 50, you're using a $500 exposure from your 1,000. So 250 coming out there, you got 750 remaining. 500 coming out there, you got 500 remaining. Nice, we use 75, $750. You got 250 remaining, or you could use the entire thing, use the full 1,000. So that's what the range is about on your leverage. Now look at what this platform is offering you. You have price has to move 1,000 points. 1,000 points price have to move for you to get 20%. So if you expose 25% of your account, out of your 1,000, you're exposing $250. What is 20%? Nice, of your 1,000? 20% of your 1,000 is $200. So you are exposing, you are risking 250. Risking 250 to make 200. You know what we call that? We call that high risk, low reward. We don't want to play that game. We don't want to play that game at all. And if you go 500, yeah, if you go 500, you're exposing yourself 500. Price of the move 1,000. You're putting more money up, risking more money and receiving less. You can never play that game and win properly. Here, we call here low risk, low reward. So these platforms and them, this allowing you low risk, low reward. You think you're gonna get any financial breakthrough there? Here, allowing you high risk, low reward. You think you're gonna get any financial breakthrough here, and you're not gonna win all your trades. You're gonna be in different market conditions, whether long, short, whether whatever you're doing. And here you have time against you. Here the leverage is not in your favor. Instead stacking the odds in your favor for you to, even if you take 4 positions and 3 don't work out, even if 1 work out because you have a 1 to 5 or 1 to 6. So even if you put 4 positions on, 3 don't work out and 1 work out, you still either nil, which means you get back all your money still, or you can still end up making a profit, even if you lose 4 out of, 3 out of the 4 that you take. That is what you want to play for. You need that risk to reward to actually play the game like that, stack the odds in your favor to make money. Alright, so here we're looking at high risk, low reward. Here we're looking at low risk, low reward. Alright, so these different bettings and these different stakings, they have timers on them. In Forex, we have no timer against us. So if we go long on something, it could stay 3 days, it could stay a week in one area, there is no contract expiring worthless, and we suffering any loss or anything because of time. Even if we have the direction right, you lost because the time ran out and price didn't move as yet. We understand volatility. We understand the price takes time to actually progress in our direction. And we understand cycles, levels, counts, and the dealer's template. So we just have to respect that between a 1 month or 3 months, 20 days to 60 days. And we don't have time against us. In stocks also, that's why even though options give us the opportunity to limit our risk and have unlimited upside potential, the options have a time on it. So I could buy a call option for November 2024. I mean, the 24th of November, 2025. Nice. So it will expire on that day. So I can do it like a month out. Yeah. Now, that's why when we put the options on, we have to use the catalyst, which is the earnings and stuff that comes on a quarterly and a monthly. We have to use the catalyst. So we want the price to move big. Yeah. So we can't just put our option on for putting our option on sake. We have to use the catalyst. Make sure catalyst is in place so we can get the price to move. Otherwise, you can sit there for 2 months and price doesn't really move. You can sit there for 3 months, price doesn't really move. Yeah. So you have to know how to play the game. So here, we don't want to be using these staking things. They doesn't align in our favor. These betting things, they don't align in our favor. These derivative things doesn't align in our favor. You don't want to be trading futures off of Binance and stuff. Nice. It doesn't align in our favor when it comes to what we're looking for. Low risk, high reward. Lowest risk possible, highest reward possible. That's what we are looking for. So when it comes to broker, MD4, MD5 platforms, this is what allows us to get what we are looking for. Because now I can risk, I could have $1,000 US, I could risk 10% from that, that's $100, and I can use a 50 pip stop. Nice. I could use a 50 pip stop loss, and I can trade in at 0.01, and I could expose myself to $5 and have 3 longs, 3 shorts, and only spend 15 by 15, $30 overall. And I have a 1 to 5 risk to reward on, where if I'm risking 5, I'm going for 25. I'm going for $25. So even if I lose this one, and I lose this one, and this one alone plays out, I will still make money. Even if I lose this one, and I lose this one, and I just win this one, I'll still make money. So I don't need a 95% win rate. I don't need a 100% win rate. I don't need all my trades to play out. Yeah. I can have a 40% accuracy and still make money. 50% still make money. I can have 60, 70, but you're making money consistently and you're not winning all your trades, and you don't need a 95% win rate. Time is not against you, and you're getting a low risk, high reward. And you have your hedge on with your portfolio for market swings here, and you're catching bullish cycles, bearish cycles, and you're trading ranges when they come in, and you're just making money consistently over and over. That's what you want to do. Make money all the time. If you start off with $10,000 and you build a portfolio, at the end of the quarter, you took 10 positions. Yeah? 6 of them played out well. Or let me say 4 of them played out well. 6 of them failed. And you end the quarter with 25,000. What did you lose? You took 10 positions, 5 long, 5 shorts. 6 of them failed. 4 of them played out. You started with $10,000 US. You end the quarter with $25,000 US. What did you lose? Would you look at those 6 positions that went against as losses when you started with 10 and you end with 25? But because you have a certain framework in your application, you was able to produce results regardless of the losses that took place within your portfolio, regardless of the trades that didn't play out in your portfolio, because that's not a loss. You started with 10, you end with 25. Yeah. What happened between those 10 positions that you put on there? Because you have a certain risk to reward. You could have still failed on 6, still profit on 4, still cover for those 6 that failed, and still end up in net profit, and you end up good down the road. That is what you're looking for. So don't fall for this crap and think it's just trade Sunday to Sunday, trade Monday to Friday, all day, every day, market moving up and down, all hours in night, all hours in morning. Nah. Don't think you're just going to come out and use certain platforms that are not stacking the odds in your favor and timer is against you. You're going to be playing the game in financial markets not to make life changing money. Yeah. So MT4, MT5 brokers is what allows us, nice, to actually have that time is not against us. We have good leverage. Yeah, we can build portfolios. We have the assets on them to give us the risk to reward that we're looking for. And that's how we play the game to win. You don't use stuff like this, high risk, low reward. You don't use stuff like this, low risk, low reward, and time is against you. Yeah. So you also saw my last video where I laid out low risk, low reward, high risk, high reward, and then we had high risk, low reward, and then we had low risk, high reward, right? So that is what we don't want, the high risk, high reward. Because some things you're not in control of your risk, you have no other choice but to take on heavy risk. And even though the reward is great, as you slip, yeah, you could get 4 or 5 straight, but as you slip, you're done. So we don't want a high risk, high reward. We do not want that low risk, low reward because we ain't here to play games. We're here to make money. We do not want that high risk, low reward, that high risk, high reward, nice, or the low risk, low reward. We want the low risk, high reward. And that's why we use this platform to trade off of. And we don't interfere with these things. Because they come like a 9 to 5. Just like how you're 9 to 5, 10, 15 years you're working, you can't save up no money, you can't do nothing for you. Even if you do a little overtime, the money still disappearing. Even if you get another job, the money still disappearing. Yeah. Coming here and playing the game wrong and making little scrums on the side, you'll be able to fill a little hole. 200-300 US extra every month. You sure still can't do nothing for you right now. But you have to start small anyway. But when you're starting small, make sure you start in the right place that you could grow exponentially over a period of time and really accumulate and compound with the proper framework to make the life-changing money. Otherwise, you're just playing the fool out here. Hope you guys learned something, get some value from this. Let's go kill it in financial markets for 2026 with Fishing for Pips. Let's show you guys how we do it on the inside. On the other side of the fence, where we make good money as traders. See you guys on the inside.